Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Bank of India. Our analyst maintains buy rating on Bank of India with a price target of Rs 120. It remains top pick in PSU bank space. We believe valuation are expected to inch higher as the return ratio profiles improves in coming quarters on the back of uptick in loan growth, stable margins and further lower credit cost. We expect ROAs of 0.9% for FY24 and FY25 earnings, driving ROE of 12% for the respective periods. We see upside risk in the loan growth guidance along with improving asset quality trends led by lower slippages and strong recoveries would likely augur well for the earnings trajectory, driven by lower credit cost should lead to improvement in the ROAs in coming quarters. The stock currently trades at 0.7 times FY24 and 0.6 times FY25 estimated adjusted book value. The stock has outperformed the broader indices in last 12 months. Next on radar is Punjab National Bank. Our analyst maintains buy rating on the stock with a price target of Rs 86. Asset quality trend is quite encouraging and will help in faster normalization of credit cost for the bank. Lower slippages trends likely to narrow the perceived gap in underwriting with respect to peers. Provisions in remaining 9 months of FY24 would be largely related to back book, net NPLs and restructured book. Thus, we should see return ratios staying subdued for a few more quarters on the back of high credit cost, but the market may look through a one-time book value adjustment. We expect OPEX costs to fall substantially, led by lower pension-related provisions as bond yield stabilizes, and credit costs to fall significantly as net NPS declines steadily in FY24 to 1%. That should boost the return ratios in FY25. At current market price, the stock trades at 0.8 times FY24 earnings and 0.7 times FY25 earnings book value estimates. The stock has outperformed the broader indices in last 12 months. Next we cover SRF Ltd. Our analyst maintains buy rating on SRF with an unchanged price target of Rs 2,745. SRF stock price has seen a decent recovery, but it is still 16% below its 52-week high of Rs 2,864, which provides a good opportunity for the investor to accumulate the stock. Optimistic commentary by SRF's key client Bayer on easing of inventory, destocking in agrochem space and healthy growth outlook for its core crop protection portfolio bodes well for growth in SRF's fluoro specialty business. Moreover, upcoming production cut for HFCs in the US would have twin benefit of volume and better ref gas pricing in second half of FY24 for SRF's fluorochemical business. The company's massive capex plan of Rs 15,000 crore for the next 5 years, with majority focus on the chemical business, would drive sustained high double-digit growth for its chemical business. SRF is a quality player and its investment in specialty chemicals along China Plus One opportunity provides strong medium to long-term earnings growth prospect. We expect 15% PAT CAGR over FY23 to FY25 earnings along with healthy ROE of 20% and ROCE of 21%. Valuation of 25 times its FY25 earnings EPS also seems reasonable. For more detailed disclosures and disclaimers, please refer to our research report or contact our nearest branch. Please read the risk disclosure document issued by SEBI and relevant exchanges and terms and conditions on sharekhan.com before investing.
Thank you for watching. To keep up with the latest from Sharekhan, make sure you subscribe to our channel. You can also download the Sharekhan app for all your trading and investing needs. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.